Alrighty, what's going on, everybody? Happy Sunday. Happy Sunday. Give me one sec. Hold on. There we go. All right, cool. Why the heck is this stupid thing? There we go. All right. Enough of this shenanigans with this app crap. All right. How is everybody? Awesome. Yeah. So it's Sunday. Like I said, I'm gonna do these on Sunday until Sam starts doing his backup. It's just gonna be a whole lot easier for me because Tuesdays are gonna be tough with all my kids doing all the crap that they're doing. So yeah, it is what it is. Hold on. All right, cool. Yeah, cool. All right. Close out of Discord. All right, man. So let's get started. Yeah, there's a couple people on. Good. All right, awesome. Let's start with the fundamentals, right? One of the things that I wanted to do for the new year, and I just honestly this weekend kind of got away from me, but I am going to probably do it sometime this week. And what I'd like to do is on a weekly basis, do almost like a fundamentals podcast. I'll upload it on YouTube, and it's not going to be long. It's going to be like a 30-minute, 45-minute tops, quick little collaboration between, or I guess not even collaboration because I'll just be doing it, but I'm going to be kind of going through some of the sources that I've looked at and some of the fundamentals that I've read, heard, and how it kind of relates to what my weekly preparation is going to be. So I had every intention of doing one off of NFP, which was actually going to be, I was trying to do it yesterday, ran out of time, was trying to do it today, but I've been building a new gaming computer and Microsoft has just royally pissed me off. I've been on the chat with Microsoft support for 4 hours, just trying to get them to send me the verification code to my phone, my text message. And for some reason they can't figure it out. So yeah, I've just been, and so I can't log into my gaming computer, but it is what it is. Anyway, so let's dive into it. And for me, I'm not going to talk too much about fundamentals because, like I said, I've got this whole. I mean, I've got clips of it. I've got to mesh it together. I've got to edit it, and then I can upload it. But it's going to be very, very specific to fundamentals. Typically, what I'm looking at, like, I'm not going to be diving into like crazy stuff like what's happening to the, I don't know, the Swedish market or something like that. It's really, I like to trade the majors. So it's going to be really regulated to just the large world banks and the institutions that trade them. So, alrighty. So with fundamentals, right? Yep. You got it, man. You got it. With fundamentals coming up, I mean, everybody should look at the Forex Factory or my Forex my Forex book, or whatever you're using to look at the news. One of the biggest things that I implemented last year, going into fiscal year 2022 for me, was really diving into fundamentals and incorporating that into my trading plan. And I can tell you, it's helped me out tremendously. With that, my suggestion to everybody is really dive into fundamentals because, I was under the impression, because this is what I was told and this is what I was taught, that who cares about fundamentals, that just trade the chart. And for me, that's not the case. For me, you have to incorporate fundamentals to get that total picture, because if not, you're just playing with only half of the book. All right. So anyway, fundamentals coming up. There is huge Bank of Japan news coming out. So hopefully you guys have looked at what's been going on the last 30 days with the Bank of Japan, them buying up all of the central bank's debt. Looking at, I think at this point, they control over 60% of the national debt of it. So I would be very cautious with looking at yen crosses. And what I specifically mean by that is, like, I could tell you, me personally, I'm not going to be doing anything with yen crosses just because, for the love, hold on. Hold on. Okay. Sorry, I'm still fighting this cold. So today's video is not going to be too long. All right. But I would just be very cautious with the Bank of Japan. And what I mean by that is I'm personally not going to be trading any yen crosses because they're nowhere close to where I want to play out of a structure point. And I'm not going to play the noise in between. The Bank of Japan has been very specific. They're doing everything in their power to manipulate their currency. So I would be looking for strength in the yen. Outside of that, I'm not going to be doing much with it. Okay. We do have Powell is going to be speaking Tuesday morning. So Tuesday is going to be a pretty big day. You've got the Bank of Canada before New York market opens is going to be speaking. You have the Bank of Japan that, supposedly is at 5:10, but who knows? They like to do it at all kinds of times a day. You have Powell speaking. I really don't know tremendously what the outcome of that's going to be. If you look at it, this really wasn't a like planned speech. It's just there's a conglomerate of World Bank leaders. So he's one of them. He's going to go up. And you can see here, it's the International Symposium at Central Bank Independence in Stockholm. So who knows what he's going to be speaking on. I don't think he's going to tilt his hand in letting anybody foresee what's going to be happening at the next FOMC meeting. If you were able to pull or view or listen to any commentary on FOMC meeting minutes that were released last week, you'd know that the Fed is very adamant that they are not going to be, pulling back on any interest rate hikes this year. There's a lot of speculation that they're going to continue going with it. And don't let the jobs numbers that came out on Friday fool you in thinking that it was a positive jobs report, because it was not. All right. And then, of course, the big one that I'm going to be watching is this one right here, is CPI data. Does anybody know or have heard of any controversy coming out with the CPI data? Anybody at all? All jobs reports were good for USD investors. No, they weren't good. They weren't good. So let me pull up my notes. Hold on. So, and this is where they didn't underrate it. Does everybody have a good understanding of, except for, okay, where are you getting your information from? Forex Factory. Did you do any work outside of Forex Factory, or did you just read the numbers and it said green or red? Like, did you actually read the numbers and see what it represented? You did? Okay. So what are your thoughts on them using the two separate surveys? But I'm a part of the fundamentals, though, but honestly didn't read any article about since I was upset because my EU sells. All right, so let me give you a quick little. We'll do a quick little indoctrination here into the NFP numbers. All right, they're numbers that are surveys, right? They're surveys. Okay, and I'll quickly read you. So this is this was I've got a bunch of links and a bunch of sources that I've gotten this from, but here I'll quickly read this to you. Okay. So this was an article piece from a economist that let's see, when did he release this? He released this Friday afternoon. I'm going to read this. Can you drop the links into Discord? No, because there's like 50 of them, and I'm not going to spam Discord with it. You can Google them. I mean, yeah, you can Google them. Wait, let's see. In theory, it should have been bad news to see good jobs reports Canada added, but it's not even the jobs reports. All right. So here, let me explain this to you. All right. Um, okay. So the labor market controlled by the US White House is what releases these surveys. Okay. And it has been precedent for over the last 30 years that they've been using the same survey system. This specific NFP, they use split survey systems. Why? No one can answer that. So let me just read this. All right. So there's two red flags. The first red flag comes from a difference in the two surveys used to compile the jobs reports. All right. An established survey of businesses and a survey of households. So there's two surveys, businesses and households. All right. The number that was released, the 223,000 jobs added in December, comes from an establishment survey, while the headline unemployment rate of 3.5% came from a household survey. Why did they use two separate surveys for the same data, right? If they're going to use the establishment survey, they should have done it for both numbers. You know, it's a smoke and mirrors game. That's all it is. Okay. But both have their own measure of employment that tend to be roughly in sync with the other, except in 2021 when they diverged sharply. And that's what's happening right now is both of those surveys are diverging sharply. All right. The other issue with the jobs reports is this. Okay. Since March, there has been a divergence of 2 million jobs. Okay. Why are we seeing this divergence? Okay. So for me, it's a clear, I mean, that's what it is. It's smoke and mirrors. Okay. It's, you know, they're counting, there's, you know, and this is what economists have been bringing up, that they're double dipping jobs numbers. So what they're doing is you have a business survey and a household survey. Well, let's say that they do a household survey, and on that household survey, you know, these people have been employed. Well, now next month when they recalculate the survey, if those people have been laid off, right, the businesses are going to report that as a layoff, but the household is going to report it still as employed. You know, so there's such a divergence in that. The biggest thing here is it's the amount of responses in the surveys. And this is something I pulled, right? This has been, I've triple correlated this. Businesses are not responding to the labor market surveys at anywhere near the rates before the pandemic started. Okay. The establishment survey, for example, has lost a quarter of the businesses responding. So over 25% of the businesses that were responding pre-pandemic are not responding now. And the response rate is down to just 44.8% of all businesses reporting. So look at those numbers and you ask yourself, are you willing to bet the house on just 44.8% of everything putting in? You know, so I am not taking those numbers personally. I know I can see the writing on the wall. I know what's going to happen based on simple economics. The Labor Department statistics of 10.5 million job openings, right? That survey response rate has plummeted to just 30.6%. Only 30.6% of the total amount of surveyors are reporting. So you're only getting 44.8% of the businesses and 30.68% of the establishment. That's garbage. That's ridiculous. And if like if you understand why the Fed is raising interest rates, right? Why the federal funds rate has been increasing, it's to thwart inflation. Well, the whole point, if you listen to the minutes from last week, the whole point is they're going to try to raise the unemployment rate, because if they can raise the unemployment rate and pull people out of work, they can lower the employment rate. That can then start to thwart off inflation. You know, it's the circle of death when it comes to the economics of the world. So interest rates go up, unemployment goes up as a essentially a catastrophic event because of that. When unemployment reaches a plateau level, that's when the rates come down. When the rates come down, everything is hunky-dory for a good amount of time. Economy is thriving. And then we start to see inflation creeping up again. That's when we have to raise the rates again. So it's this circle of death. All right. Hold on. Give me a sec. A lot of banks using contracts and consulting firms to replace full-time employees. Yeah. And not only that, but full-time employees went down, part-time employees went up. So let me ask you, why would the amount of jobs, the biggest percentage of jobs in November were part-time employees? Can anyone tell me why? I mean, maybe I'm just as naive as I'm supposed to be, but can anyone explain to me why the largest percentage of jobs offered in November were part-time employees? Hold on. Holidays. You got it, bro. It is part-time workers for seasonal holiday work. How many of those people do you think already work a full-time job? Because I can tell you a great deal of them probably do. And they're picking up that part-time job work so that they can pay for the holidays. So then those numbers are even more skewed because it's not like we're adding more workers to the workforce. They've already been in the workforce. They're just adding extra job, more hours to that. So that's my understanding. That's where I'm coming from. That's what I'm looking at. And for me, the writing is very, very clear. The Fed next, I'll tell you right now, the Fed's going to come in with a minimum of a 25 basis point increase next Wednesday. I mean, I'm counting on that. I've already expected that. Now, if I'm wrong, I'm wrong, but I'm expecting that. And they're going to continue to hit the gas pedal with interest rates. That funds rate is going to continue to climb throughout this entire year. Is until the labor market, and right now the labor market is what's going to control everything. Until the labor market catches up and overtakes the inflationary rate, we're not going to see anything change. If it is in 50 basis points, people will lose their minds trying to buy. Yeah, probably. Yeah, probably. But I mean, I don't know. I honestly think the numbers out of the labor department for NFP were manipulated specifically for this reason, so that they didn't raise it more than 50 basis points. And simply, it's just a save a face for, this current administration's, economic policy. All right. Now, on top of that, one of the things that I wanted to bring up, anyone know any kind of scandal going on with the CPI data? Anyone heard of any scandals? Does a negative NFP tend to cause strength in the dollar or strength in indices? It depends. I mean, there's so many scenarios that can play with that. Did they no, it has nothing to do with recalculated. Here we go. Hold on. Let me do this. Because I can't say this out loud, because then this video would definitely be banned. Hold on. Hold on. Let's see. It has everything to do with moments before the CPI data was released in November. The amount of volume that was traded. Hold on. There we go. Let's see. There's a couple outlets. Hold on. There's Bloomberg. Let's see. 60 seconds before the data was released. Here we go. Let's see. Hold on. Where is... Go over here to Bloomberg. Here we go. I'll just put this right here. They're saying that there was no leak, that it was just coincidence that the amount of volume traded in the right direction was there. Oh, hold on. Here we go. So there's going to be an investigation into this. They've already started this. I was reading up on this, and now whether or not the investigation does anything, but that's all I got to say right there. That's all I got to say right there. Ask yourself, why would they release it? It makes sense. Of course it does, and there's a lot of traction behind this. Because, let's just say there's a lot of traction behind this. So I'm curious to see last CPI release last month, we saw a complete turnaround on what the US dollar was doing, the bond market was doing. So I'm curious to see, and the reason I bring this up, I'm curious to see if this gives us absolutely zero reaction, because they're obviously not going to leak. If there was a leak, they're not going to leak it now, right? They're not going to give this out ahead of time for investors or traders to do something with. So I'm going to be very closely watching what comes out of the CPI data. But of course, all eyes are on FOMC the following week. All right. Is SPY the same as SPX? Yes, it is. The VIX was really odd last high on the CPI. Definitely. Oh, yeah. Yep. Yes. Yeah. There was a tremendous amount of, I think it was something when they ran the numbers, it was something like 40 times the normal volume as you would normally see at that time. So anyway, there's really not on the calendar for anything else. Now, obviously, you got inflation numbers year over year coming out of the Australian dollar. I really don't see a huge, movement on the Australian dollar. I do think that it's going to just continue to push the Australian dollar lower and lower and lower. You can see they're already pricing in about a 0.4% increase. All right. But yeah, so let's jump over here. Let's get into the charts. And very, very easily, what I am anticipating here on the dollar is pretty simple. We're either going to create, because we did trade and break this low. So we've broken the order flow and we have accumulated by doing so. So at this point, this is my line in the sand for buys. If the dollar is going to strengthen, which I do have the anticipation of dollar strengthening. And again, the jobs numbers, this was the jobs numbers reaction. The jobs numbers, I think, are just a mere smoke and mirrors, a shell game. It's just a bunch of shenanigans that I think investors are. All right, there we go. I don't know what. Big shout out to my internet provider. Fantastic job. They're freaking idiots. Yeah. If it goes down again, there it is. If it goes down again, it is what it is. But yeah, Blue Stream Wireless or Blue Stream Fiber. Shout out to you guys. You guys are horrible. I wish I could get another provider. I've even looked at selling my damn house and moving somewhere else because of my internet, but it is what it is. Anyway, yeah. So, anyway, let's see. Okay. So what I was talking about was very simple. We've already broken the low, right? We've done it on dollar. We've done it on euro futures. So we've broken the low. We've broken order flow. My anticipation now is, do we accumulate to start the week off here out of this reaccumulation that caused the break, or do we come lower into here? I'm not looking to short the dollar from here. All right. At this point, if the dollar is going to short, I've got to wait for this break here to do that. And again, if for me to buy it, I just need to see, do we do something here, or do we come lower? You jump over and look at euro futures, which is just a diametrically opposed asset to it. Hold on. There we go. You look at euro futures. All right. Maybe we look at euro futures. I don't know. Holy crap. Yep. There we go. So if you look at euro futures, same thing. We've got a confirmed distribution. If you're going to be looking, and you already see the divergence between dollar futures and euro futures. Euro's already taken the high. So you could see I've got my alert sitting right at the 50% of where I'd want it to see it happen. And I want to see, does the dollar or does the euro give us a reason to build a schematic and take this market lower? All right. So, to start the week off, I'm looking for shorts on the euro side. I'm looking for buys on the dollar side. All right. And for me, it's pretty clear on where we're at with it. Continuing, right? So like for euro USD, I'm looking at a short position. That's where I want to take it. And you could see, ideally, it's going to be the same concept, right? We've got a confirmed distribution. I'm just going to be waiting for price to either come into this specific price action here, which is just a redistribution, or are we going to come into the entire UTAD and then build something? So I'm not going to be sitting on a 5-second chart. I'm not going to be sitting on like a 15-second chart. This is, if you look at how specifically Euro USD distributes, they take their time in doing it. All right. So I'm probably going to be waiting. I probably won't drop anything lower than a 5 or a 15-minute chart. I want to see Sunday and Monday give me some kind of indication that they're building something. I'm not going to be really eager to jump into anything, anything too quickly, but I do want to make sure that I'm in this short position. All right. So Euro USD, I'm definitely going to be looking for the shorts. I'm not looking for buys whatsoever. And then of course my line in the sand is if we do break the high, then that's it. I'm no longer looking for shorts. I'm going to have to wait for either dollar to get a little bit more into a demand area, or I'm going to wait for, essentially for Euro to come up a little higher. All right. On GU side, right? So on the GU front, there we go. Let's see, what do you got here, bro? What is this? Dude, my internet's got to be freaking crapping out. All right, well, while that's loading, we'll do GU. So you could definitely see GU already kind of has shown confirmation of the distribution. What I'm waiting for now is, in reality, I want us to trade above this line, and I want us to do something in here, right? What I'd like to see is I'd like to see this to be as the sign of strength, which will ultimately lead to being, once we break this low, the shakeout of my redistro. So I'm looking for shorts on GU, but I want us to sweep out. I actually want us to sweep out all of this here. So I want us to come up somewhere into maybe the 122 area is where I'd want us to do. It's going to be this price action. You can kind of see I've got it boxed out. This is where I want to see price give me some kind of indication for us to take this lower. All right. And that's wait, no time for that. Yeah, I don't know. I mean, is it just one chart? AJ. Yeah, bro. I on the daily. Oh, hold on, bro. You have a 1 week, a 2 week, a 3 week, a 1 month. What is the difference between all of those charts, bro? Yeah. Okay. So this is the SC that's maintaining. Yep. You're absolutely right. You haven't been there since the start of the year, last year. And you're probably, I mean, just do the math. Think of how long it takes. So ask me this in 3-4 months when we get down there. Yeah. Yeah. I mean, yep. Looks good. It looks good. All right. So GU, yeah, GU, I'm looking for the shorts. I definitely want us to get a shake out of this though. All right. So I'm expecting, start the week off. Obviously maybe we gap down tonight and then we trade a little bit higher, sweeping out all of this, give us a shakeout to then create a redistro and then let this thing go, because this to me just has a tremendous amount of downside potential. We've got, I mean, geez, just to make a new low, we're talking a measly 1,800 pips. So, if I could start positioning myself into this, just like I did in this entire push down all in here, I'm going to do the same thing going here. All right. So I do like GU. AU and NU. So I've been targeting Australian and Kiwi pairs the last like month and a half, and it's been very, very profitable. Um, I'm pretty happy with my like management of them and how I got in. If GU goes up without hitting either of those targets and redistributes, are those areas you still wait? Are those areas you have still valid, or do you just play the redistro? So depends. Like, what are you getting into the entry off of? Like, what's the basis for your entry if it doesn't take out those highs? You got to have a point of interest. So if you have a valid point of interest, I guess so. I don't have a valid point of interest there. So it's really going to be incumbent on you to figure out, is this one a valid point of interest, and two, is it a point of interest I want to put risk on? So I personally, if we don't sweep out and shake out weak-handed sellers, I'm going to wait for us to break a new low, essentially out of that redistro. Okay. Man, I don't know what the heck. Hold on. Let's see. Let me open up another. I don't know if Trading View's just acting up or what, man. Most likely my internet. When I say I'm offsetting my stop loss, what do you mean? I'm splitting it off the 50 and the 80. Okay. So here we go. It's not because stops are too big. It's because the risk over reward isn't worth it. I mean, I guess the terminology, your stop is too big, is relative, right? Because if I have a 3 pip stop, my target is only 10 pips. That's a crappy R to R. But if you have a 10 pip stop, but your target's 1,000 pips, I mean, your R to R is great. So yeah, it's the R to R. All right. Well, TradingView is not acting up with me. I mean, look at this. I can't even see anything over here on the right. Like no numbers are coming in or anything. So I'll just talk about it. Because this is it's probably my internet, but on the AU front, here we go. On the AU front, I'm most definitely looking for shorts. We are in a massive, massive distribution. I'm pretty happy with the distribution we're at. I like the area we're in. Oh, come on. All right. Well, while this is loading, here we go. I like the area that we're in. Yeah, I like the area that we're in. I like I like everything about this. Okay. It's just a matter of, I just got to be patient and wait for the confirmations. Right. So this is going to be the distribution that pushes us into a new low. The question is just, when the entry is going to present itself. I definitely, we're in this. Oh, come on. We're in this order flow leg. So I don't even know what this is. So I'm pretty happy where we are trading. We're right here in this micro distro. So I like everything about this. I'm looking to short this. I'm going to be, AU, NU, pretty much all the Australian and Kiwi pairs, like I said, for the past like month and a half, I've just been laser focused on, simply because the fundamentals and the technicals have really lined up with what the Australian dollar and the Kiwi dollar have been doing. You look at futures, right? Do not be fooled that the US dollar drives the AU or NU markets. They do not. All right. The US dollar can be bearish and AU can still be bearish. You look at Australian futures, you look at Kiwi futures, and they're identical. That tells you that the Australian and Kiwi markets drive AU and NU, not the US dollar. So I'm definitely going to be looking to see what we've got going on here. Again, I'm not a big Sunday or a Monday trader, but ideally what I'd like to see is us break below down here, somewhere in here, and then catch the pullback to just keep taking this lower. That's ultimately what I'm going to be looking for. On AU, what about if we broke 68.93? What about it? Yeah, I mean, there's I don't know. There's about 10 different scenarios off the top of my head. Okay. If this is a reaccumulation for you, for me, it's not. I mean, we're not. Yeah. I mean, for me, yeah. I can talk about that for hours, but for me, this is not. We're not even close to phase D. So I'm not even gonna speculate that it can be a reaccumulation. I mean, sure. Can it go higher here? And we still are in distribution? Absolutely. 100%. So yeah, if the Australian economy opens with China to trade again, are you still going to be looking for shorts? Yeah, but just from up higher. Yeah, just from up higher. So yeah, there's a lot more. Yeah, there's a lot more into fundamentals, but yeah, I definitely keep an eye on what's going on with China. Like I've said before, China markets and China policy really influences the Australian dollar and by default the Kiwi dollar. So yeah, yep. And then the same thing for NU, right? NU very similar to AU's price action, but we know that the Kiwi has definitely become the leader on the lower time frame, right? Higher time frame, it's the laggard. That's why we've broken some higher time frame order flow. Oh geez, hold on. That way you guys can see it better. So this break right here means diddly squat to me. It's just a break of order flow. Australian dollar came into it properly distributed, and now you can see the weakness coming in. So what I'd like to see is this turn into a redistribution. So I've got my alert sitting right here. I don't really think we go up that high, but if we do come into this price action here, the higher like 3/4 of this entire move, I'll be looking for distros. Again, I don't anticipate that we get that. If it does, it's one of those like it's a happy birthday to me. I'll take it. But what I do want to see is I do want us to ultimately sweep out all of this and either play into something here or just play into something a little higher, maybe in the 50% of this, to then make the new short, right? So I definitely feel, again, Kiwi and Australian dollar, lots of real estate to the downside to get up to. So that's what I'm going to be waiting on. All right. And if I'm talking about AU and NU, I've also got it because if you look at the Australian Kiwi futures, the Australian markets are moving this. So you can look over at Odd Chef, look at Odd CAD, and they're moving very, very similar. Sort of struggling with when a distribution is valid to play or when to just follow the continuation move until there's a weakness or a new leg. Okay, my answer to you is play at least for me, I'm playing the pro trend move. So play the pro trend move, whichever that is. And, if it breaks, then okay, then you take the loss. It is what it is. This is price action from NU on January 4th. On the 30-second chart during London, I could tell you the first question is what gets me to a 30-second chart. So no clue. What gets me to a 30-second chart? Like, where is this? What has this done? So I don't have an answer for you until I see that. Yeah. Nothing gets me to a 30-second chart. When taking a trade, how do you take into account spread relative to your entry and stop loss? What do you mean take spread? Yeah, add spread in. Yeah, add spread in. Yeah. So anyway, looking at Odd Chef, looking at Odd CAD, same thing, right? I mean, you could see where we are. Here's your order flow, right? There's your order flow. I love the area that we're in on Odd Chef. We caught a couple of shorts out of this, making the new low. So, whether or not this does this again and we go down, or whether or not we just come up, maybe mitigate out of this and then go down, I'm looking for the same, right? I'm looking for weakness in the Australian dollar. You look at NZD Chef, same thing, right? NZD Chef coming into the order flow. right? Coming into your order flow, we distributed. I don't trade NZD Chef, but I'm using it as just another comparable strength. You know, I want to see, do we come down and break? Do we go higher into this and then break? But I'm going to be looking for those shorts. All right. I'm going to be looking for those shorting opportunities on NZD Chef, Odd Chef, AU, NU, and then jumping over to ACAD and NCAD, same thing, right? We are very, very nicely playing into our leg, right? So that's the leg. You can see, does this, do we spend days here making a distro? Or for me, what I want to see is, do we go higher with it? Does it give me something to play out of here? Or do we break the low and then do I play continuation moves down? That's what I'm going to be looking on. This is the POI. Let's see. So you're out of order flow. Okay. So you're playing out of order flow. All right. So I'm confused again, then I guess, by what you're asking. So, yep. All right. Took that trade and I didn't take it on NU. Well, no, I take it back. I did take it on NU. Yeah. I took a trade out of here out of New York. So what's the question? Yeah. So what's the question? This is a price. Wait. So sort of struggling with when a distribution is valid to play. Yeah, I mean, that's entirely up to you. For me, this was a type 1 distro on AU. It was a type 2 on NU. What I wanted to see was, I just wanted to see the weakness. We got a redistro here. So out of that redistro, and once we confirmed this break here, I played a limit out of the redistro, which tagged me in off the 80%. So I played that. And then when we played this, I caught the 50% here, just offset. I had split entry 50-80. I just offset my 50-80. So yeah. I'll tell you right now, though, one of the main reasons why I took this was go look at AU at the same price action. So that would be my suggestion. Yeah, for me, I didn't play the distro. I played the redistros. On that EU POI that you have, you mentioned last week that futures drive currency markets and not vice versa. Help me make sense of DXY taking the December FOMC low, Euro futures taking FOMC high from the same period, but EU respecting that high without taking it. Yeah, so institutions trade futures. So the futures markets took it. EU is being traded not on an institutional. So when institutions are trading, they're trading futures contracts, not what Awanda or FXCM is posting. So that would be my answer to you. If it redistributes, then the distribution doesn't hold anything until it makes a new leg. So I thought since it did redistribute, it shouldn't be a POI. Since it did. All right. So I don't understand what you mean. So I thought since it did redistribute, it shouldn't be a POI. Yeah, but these aren't redistributions for me. That's not a redistribution for me. At least one that I'm going to take an entry out of. Yeah, validate the redistro. So you'd mark it out. I mean, for me, yeah, like where's your accumulation? Where's your shakeout? What did it shake out? You know, so this for me is not, this for me wasn't applicable for me to trade out of. So this right here was the key, especially with the micro in there. Yeah. Okay. Like I said, odd CAD, very much the same price action. I'm looking short this bad boy down, as well as NCAD. All right. I'm looking very much NCAD and ACAD. Remember, keep in mind that let's get into this. Could the massive repricing down on EU be terminal shakeout for a reaccumulation to take EU higher into the higher? It could be, but give me a reason why investors are buying into the euro. Give me 2 reasons why to buy into the euro. Dollar weakness. So what you're saying is investors right now are taking their money out of safe havens like the dollar, out of that guaranteed government bond, and they're going to put it into the euro. They're going to give it. They're liking what the ECB is doing, and they're going to put it into the euro. To sell it at a higher price, sure, but why are you gonna buy it up to then sell it at a higher price? There's no right now. There's no reason for investors. I mean, just look at indices. There's no reason for investors to start buying up. Who's buying up crypto? Anybody going to buy up BTC right now? You're in a risk-off sentiment. Since it broke order flow, they might reprice for a more premium price. Yeah, they could. I'm not buying it up. I'm only going to wait for the shorts. So, yeah, I'm not. For me, I'll just sit on the sidelines with it. I'm not going to try to buy it up because I know it's going to be a whole lot easier to sell it off than it is to buy it up. On NZD CAD, I'm looking at the same exact thing here as ACAD. So, I mean, you could see the where we're at. What I'd like to see is I'd like to see this turn into a redistro, something like that. And that would be my entry, right? That's what I want to see. So realistically, like my targets, these are my main targets are going to be Kiwi pairs and Australian pairs. And I'm going to be looking for the shorts on EU. That's going to be my main thing. You know, what happens, and of course GU as well, but that's going to keep me busy this week. I'm not going to go too crazy. I know we don't have a lot of volatility coming in with news. So, you know, that's ultimately what I'm looking to do. And then what we get here, I'm most definitely continuing to look for shorts on indices. Nothing is keeping me from shorting indices. I worked in some shorts last week. I was happy with what I made off of it, but you can just see what this thing is shaping up to. You know, we have divergence here, right? We have US 30 that gave divergence, took out this high. Who cares? What was this high representing? Diddly squat. You have a massive distribution with a massive redistribution in the making. I'm anticipating that we do come a little higher before selling off, but I could be totally wrong. We could just completely fall off like this. So I am targeting new lows. Anything I can get into, especially if we can get up here, anything I can get up in there, I'm targeting new lows. I'm taking it down to 27K. Like I said, way back in October of 2021. So I'm looking to do that. And like I said, the divergence is on SPX and NASDAQ. Hold on. You can see, right? There's your divergence between US 30, SPX. We perfectly came in very nicely into the 80% of this. And look at that beautiful distribution with an accumulation that, again, I'm anticipating is going to be a redistro. So do I trade silver? I accumulate physical silver, and that's about it. I don't have a broker that has decent silver spreads, so I don't trade silver. But yeah, this right here, I'm most definitely anticipating a redistro. So just wait for, right now we're still in accumulation. The question is, do we either, you can see I have an alert down here. Do we either confirm the redistro, or do we trade up a little higher? And there's an area in here I think we may come into, but I am going to be looking for shorts on these indices. And then of course, NASDAQ, you know, NASDAQ was completely off the teeter. You can see what NASDAQ's doing. And, you know, for me, again, the question is going to be, do we make a new low on NASDAQ before coming up to the type 1, or do we do it now? You know, so I would be very, NFP took SPX to just a 382 pullback. Sounds good. Yeah. All good, man. Yeah. I'm definitely looking for shorts out of it if it can give me something. So yeah, if it can give me something, I'd be really, really happy with it. But I'm only looking to short this. And SPX before the end of the year, we'll be under 3,000. We'll be under 3,000. We're going to take these lows. We'll take these lows here. We're going to come into, like I said, we're coming into COVID. So yeah. I'm I'm not, like I said, just look at how much work goes into buying these stupid things up. And look how easily it is to just sell these suckers. So if there ain't a sell opportunity, I ain't selling it. I ain't going to buy it. On SPX, it's accumulating in an area of supply. Does that not worry you for shorts? Let me ask you a question. Are we bearish on SPX? What's your structure on SPX? Are we bearish in structure? Are we bearish in order flow? And who's controlling this market, buyers or sellers? Does the distro have to do anything? Did the distro break order flow? Yeah, sellers are in control of this market. Did the distro break order flow? Yes, it did. What did this do? Because you're concerned that this is accumulating in prior demand, right? What did this do? Did it do anything, or did it just take it right back into the slingshot that created this whole break? So yeah, my answer is no. I'm not concerned. I was anticipating. That's why I had this alert here. I was anticipating an accumulation here so that it can get back up into this area. Yeah. Yep. Well, it's not even mitigating. I mean, it's this is. I mean, by the end of February, we're going to be below here. So just the question is how we get there. So yeah. Yep. So that's my game plan for the week. You know, I'm looking at short indices. My anticipation is that we are, and my suggestion is this: keep a hold of what the bond markets are doing. Bond markets are going to indicate, especially the 10-year and the 2-year. Bond markets are going to indicate what the US dollar is going to do. So my anticipation is that if we break below here on the 10-year, it's definitely coming into this. So we can anticipate that the US dollar is going to continue to decrease in value. If they accumulate here and go higher, you can bet that the US dollar is just going to continue to strengthen. So US bonds always drive everything. Yep. Yeah. Yep. So keep an eye on the 10-year, keep an eye on the 2-year. You know, that would be my recommendation. You know, you want to know what's going to happen with the US dollar. It's going to be right here in the bond section. You know, and you know, we'll see what happens from there. So I'm not, you know, EU and GU are on my list, but they're not my go-tos this week. I'm sticking with the Australian and the Kiwi pairs. You know, and then of course I'm just going to be if they give me shorts, I'm just going to continue to ratchet out shorts on indices, because they're giving you quick money. You know, they're giving you quick 1 to 15, 1 to 20, 1 to 25s in a New York session. So, and that's pretty much it. That's what I'm looking at for the week. You know, again, this week coming up, we don't have a tremendous amount of news, but we do have, you know, we do have some CPI data that I don't envision is going to give a lot of manipulation, simply because I think there's going to be more eyes on it and more scrutiny than normal because of this supposed scandal from the last one. You know, any thoughts on gold? None whatsoever, man. It looks like it's bullish until we get up into some higher areas, man. I couldn't tell you. I'm not a huge gold trader. So, I mean, yeah, Liz, it's looking pretty damn bullish as of recent. So, I mean, maybe when she gets, I don't know, maybe when she gets somewhere into this, but yeah, it looks like it's driving up some more. So, I mean, you've got, you know, maybe something in here. Maybe that's where it reaches for. So, yeah. Do you have an opinion if investing in a certificate of deposit now is a good idea? Is it a good idea to deposit money into your bank for a year or 2 years and make what's the COD, what's right now COD annual percentage rates. I can't imagine they're going to be anything worth it. Yours is 4.85%. Yeah. I mean, if that's a great number for you, I guess so. Yeah. If that's yeah, I mean, it's entirely up to you. If you're happy with 4.85% for locking your money away for 2 years, you know, I mean, let me ask you a question. I mean, realistically, let's think about this. What are you going to put into what are you going to put into it? 10K, $10,000, right? So at $10,000, you're going to make $485 over 2 years, over a year, right? Yeah, over a year. So to lock up your money for 12 months, you're only going to make $485 on your 10K. If you put, you know, if you put 1K, you're going to make $48. Is it worth it? You tell me. Yeah, there you go. Yeah, there you go. Here, hold on. There you go. Now, I mean, if you got 100K to park, you know, and you want to lock it up for a year, I mean, I definitely think there's better stuff to invest in to get a better yield. I mean, yeah, CODs is not something I did that once when I was very, very younger, and I told myself never again, because when I saw that I locked up that money and I lost out on the ability to invest in other things because that money was locked up, and then the amount of money I made off of that just wasn't worth it. So, but yeah. I mean, yeah, it depends on what you have, how much you have, and what you want to invest. I mean, you can, if you don't have to go through mortgages, I'll tell you right now, I mean, property is a really good thing. If you don't have to worry about financing anything, you have that liquid cash. I mean, you can scoop up properties right now pretty cheap. You know, you can definitely turn, you know, let's just say you had 100K and you bought some property, you know, for that 100K. I guarantee you can make almost, you can flip that 100% in the next 2 to 3 years, where on 100K, you would have made $4,800 on a CD. So, I mean, yeah, property, there's a ton of scenarios. It depends on what you're, you know, if you're talking about investing $1,000, then, you know, maybe that's a different story. USHEF is absolutely nowhere where I want to do anything right now. So, yeah, I'm overall, I'm looking for buys, but I'm going to wait. I'm going to wait to see what the dollar does. So, yeah, I know it broke order flow. So I've got it on my list, but it's nothing. I'm until the dollar confirms for me, I'm not looking at USHEF. So, yeah. Shit coins are the way. Yeah, I'll tell you what, I've been scooping up. I'm gearing up for the bull market in the crypto sector. You know, I'm gearing up for 2025. So I've been buying some stuff. ASIC miners are definitely on the cheap. So anyway, listen, I've got to run. I've got to go take care of some stuff. And like I said, I'll continue to do these on Sunday. Next Sunday, we'll definitely go a little longer. I just feel like crap right now. So my head's pounding, and I'm sure you've heard me cough up a storm. So, but thank you for everybody hopping on, and I'll upload this as soon as I can. Yeah, you guys got it. Thanks for jumping on, and yeah, have a great Sunday. Enjoy, everyone.